Under a Trump administration, should I sell my highly appreciated assets? Real estate, rental properties, stocks, whatever, to pay a low capital gains tax? The short answer is absolutely. Get rid of those properties now. Some of them may be an albatross around your neck, in fact, and get the taxes over and done with. Don't continue to postpone, defer, doing 1031 exchanges to some future perceived unknown advantage, because what is the agenda when, not if, Democrats control Congress again in the future? They want to raise the capital gain taxes by double. They want to do away with the step-up in basis on long-term capital gains. This isn't a political video, and this is just the facts. They even want to tax unrealized capital gains. Hello? Get the taxes over and done with at today's lower rates and reposition it into something that's going to be tax-free from now on. You're going to see in this episode, when we did this for clients under the previous Trump administration, they were flabbergasted when they ended up with more cash flow than their real estate was generating for them, and they didn't have to be a landlord anymore. So get ready. So I'm Doug Andrew, and I've been a financial strategist and retirement planning specialist now for 5 decades, helping thousands of Americans optimize their assets, minimize taxes, and empower their authentic wealth. And in doing so, as a tax minimization specialist, I've helped thousands of Americans actually get the taxes over and done with sooner than later on their IRAs or 401ks and convert that to tax-free vehicles. But there's a lot of people that have highly appreciated assets, a lot of times in rental properties, okay? Rental real estate. But sometimes it could be in stock portfolios or whatever. But let's focus on one that is fairly well understood. People that own real estate properties, and when they sell them and realize a gain, they usually get duped into doing a 1031 exchange, okay? Now, I'm not saying that's bad, but you're just going from the frying pan to the fire. You're usually inheriting a new headache. So what can you do better? So, folks, knowing the results of the election, and again, this is not a political video, but if you're mature enough to understand, okay, and accept the results of the election, whether your candidate won or lost, you need to understand the nature of Donald Trump compared to Kamala Harris, okay? And I'm not saying which is right or which is wrong, but you need to understand the difference, okay? Basically speaking, the Democrat philosophy for decades is that, we want to have more and more government and regulation, and the best way to raise tax revenue is simply raise taxes, okay? And you can look at any tax legislation for the last 50 years, and you can tell who is primarily in power if that legislation raised taxes. If the legislation, like in the 1980s when President Reagan was president, he was Republican, it lowered taxes, then it was because Republicans were more in control, okay? Because Republican philosophy is no, less government, and let the states do more of it. And the best way to raise tax revenue for government needs is to, military, police, protection, or whatever, is to raise the revenue that's being taxed. Now, Trump is Republican. So he's going to stimulate the economy. He's going to raise the revenue that's being taxed, but he's going to keep taxes low and probably extend the 2017 tax cuts that were going to automatically sunset or expire at the end of 2025. It may have happened sooner if the election would have resulted in Kamala Harris being president, and if the control of Congress went to the Democrats, they may have accelerated the expiration of that. But at a minimum, they would have expired and jumped back up, which would have been the biggest tax increase this country's seen in a long time when those tax cuts of 2017 expired at the end of 2025. Now, Trump's in. He's going to keep them low, and he may extend them or even lower them lower. Corporations now know that they can expand. They can hire people because he's going to keep corporate tax rates at 21% or less. Kamala was going to raise them to 28%, which was actually 33% more money corporations were going to have to pay. They were already starting to lay off people in preparation for her winning the election. They're now going to be hiring people back and expanding and what have you. I mean, Wall Street responded within 24 hours after Trump won the election because they know he's going to stimulate the economy and the market's going to be booming. Okay. So what does this mean if you have a highly appreciated asset? Well, let me go back to the previous Trump administration. Okay. During his first administration, we were helping a lot of people in California, for example. It's amazing how many Californians own non-owner occupied rental income real estate. They own rental homes, duplexes, what have you. And it's amazing because a 2-bedroom home down there is worth $1 million. And it's amazing how many people back then, I'm talking about, 2016 to 2020, one couple in particular, their 5-bedroom home that they bought, 25, 30 years earlier to raise their 6 children, they bought it for, $250,000, $300,000, and they sold it for $4 million, And, but see, if they kept it, it was nothing but a $4 million asset. The cost of living was through the roof. So we had a lot of Californians that sold because I said, sell, pay the capital gain, pay the capital gain. They bit the bullet and paid a capital gain tax of 20% under Trump. Okay. Republicans, they view capital gains in the first place as an unnecessary or an unfair tax. Why? Because most assets that appreciate, at least half of the appreciation was as a result of inflation. Why should you tax people or penalize people for inflation that a lot of times government caused? Okay, that's penalizing people for inflation. And so if real estate is appreciating at 6 or 7%, but half of that, 3.5% of that appreciation came from just appreciation, the cost of living's going up, Republicans said, well, then we should only tax capital gains, long-term capital gains, at half the rate, 20%. Okay, that's a Republican philosophy. Democrats said, no, we need the tax revenue, so let's charge ordinary income tax rates. And so that's why under Democrat administrations, they've usually taxed capital gains at ordinary income rates as high as 40%. Kamala was going to do that, okay? She not only was going to do that, she was also thinking about doing away with the step-up in basis on long-term capital gains. Biden talked about doing that. So those 1031 exchanges would have all been for naught. You won't be able to leave behind these properties to your children, and they only have to pay capital gain tax on what they sell it for over and above what it was worth when they inherited it. They have to pay a capital gain tax on the original basis which their parents have been depreciating down. It was huge because they were hard up for revenue. But then Kamala Harris wanted to start taxing people for unrealized capital gains. Between you and me, I don't know how she was going to get away with that. How do you tax people on their unrealized gain on their house or their real estate? Because now they have to cough up money to pay tax on the appreciation that their real estate went up, and they haven't realized that. It's unrealized. They haven't realized it by selling it. So where are they going to get the money? They have to borrow it or sell other assets to pay the tax on something that they owe tax on that they haven't even realized the gain. And what if the next year their house goes down in value? They weren't going to refund the tax. They may waive the tax that year and let them coast, but they're not going to be refunding the tax revenue on unrealized capital gains. I just thought, oh my heavens. There's a lot of things that scared a lot of people who understand taxation and the negative impact it has. Now, again, I'm not trying to convince you on one political philosophy or another, but now we know the results of the election. Be mature about it and get ready to act and not react. So back during the previous Trump administration, that couple that had a $4 million 6-bedroom house, They actually sold it for $4.6 million, and they paid the capital gain, and they ended up with well over $3 million. They moved to another state, which many Californians do, because the cost of living in California is through the roof. And they moved to Utah and built a gorgeous home for $600,000, twice the size of the one in Palo Alto, California. They had left over $2.4 million. They put that $2.4 million that used to sit in a 6-bedroom home doing nothing. They took that $2.4 million and put it into a portfolio of laser funds, and that's generating $200,000 a year of tax-free income into perpetuity. They're getting $200,000 a year of tax-free income by selling, paying the capital gain tax, and putting the net into IUL. So we had hundreds, actually over a 4-year period, thousands of Californians sell their highly appreciated properties, bit the bullet, paid a 20% capital gain tax. And back then they also had to pay the Obamacare 3.8%. It was worth it. They got the taxes over and done with, instead of waiting until they might double, because, Biden tried to double them. And they were happy because the net of 80% after paying the tax put into an IUL laser fund portfolio was generating more tax-free income, cash flow, than the net after tax rental income. And they didn't have to fix toilets, evict tenants, or take out trash anymore. In fact, some of them were like, whoa, where have you been? I said, we've been here all along, but you had your blinders on thinking that owning real estate was the cat's meow, and you kept deferring, doing 1031 exchanges. You thought you were saving tax. It wasn't really the ideal thing to do. They bit the bullet, paid 20% tax on capital gains, long-term capital gains, took the net and put it into IUL, and they're generating more tax-free cash flow than they ever did net after tax on their real estate. We did that with hundreds and even over 1,000 clients in 4 years in California during the previous tax administration, Trump administration, with low taxes. So what's our advice going to be during this Trump administration? Same thing. Sell. Pay the lowest capital gain tax rate you'll probably ever get away with. Mark my word, we keep flipping back and forth between one to another, okay? And I would rather get my taxes over and done with at 20% than wait and have to pay 40% or higher and lose the step up in basis on long-term capital gains, and also have to pay capital gain tax every year on what it appreciates for. Because we already know now that's their agenda to finance their more government spending programs, okay? Now, again, don't get caught up with, well, I don't really believe that. Hey, the truth, you have to wake up and see. I'm not saying which political philosophy is right or wrong. Just face the facts. Now we know what we know. Under the Trump administration, taxes are going to be low for the next 4 years. So get money out of those IRAs or 401ks at today's lower rates. Sell some of those highly appreciated assets and pay the lowest capital gain tax you'll ever pay and reposition it into something tax-free from now on, and you don't have to be management intensive as a landlord anymore. I can show you how to do that. Reach out to us. I'll show you here in a second how you can do that. So businesses are going to hire. Businesses are going to expand. Taxes are going to be low and maybe even get lower. Get rid of the capital gain tax at today's lower rates. If you wait around till later, I think you're going to kick yourself. That's my opinion. Other than that, I don't have any strong feelings on the subject. But folks, if you want to learn what a max-funded IUL laser fund is, it's totally tax-free, where I have earned average rates of return netting after all costs and fees over 10%. My money doubles every 7.2 years. Every $1 million I accumulate in one of these laser funds can generate $100,000 a year of tax-free income, okay? It knocks the socks off of most IRAs, 401ks, real estate properties, everything. So I get to benefit when my real estate does well, but I don't lose because my money is not trapped in the real estate. And I teach you how to do this in this book. Now, it's called The Laser Fund, How to Diversify and Create the Foundation for a Tax-Free Life, a tax-free retirement. Now, this has been flying off of our warehouse shelves. I can hardly keep up with it. We're in our 10th printing, and you can buy it on Amazon for $20 up to $60. If you buy it on Amazon, thank you, but I'll gift you a copy free. It's 300 pages. To claim your free copy, you simply go to laserfund.com or click on the link below, and I require a little bit of skin in the game. There ain't no such thing as free lunch. I want you to contribute a nominal amount towards the shipping and handling to send out the book. I'll cover the rest of that cost, and I'll pay for the book. I'll fire out a hard copy to you via priority mail. But when you're in there claiming your free hard copy, if you like to listen and learn or watch and learn, there's those educational formats for a nominal investment. You can even schedule an appointment with an IUL specialist to see how these strategies may apply in your particular set of circumstances, and they'll run an illustration. What if you rolled money out of your IRAs or 401ks and put it into a laser fund? What if you sold this rental property and put the net into a laser fund? Or you sold all of these rental properties and put into here? They'll create the illustration for you and you make the decision if you want to get the taxes over and done with sooner than later. If you want to attend an educational webinar, I teach one every week, absolutely free, okay? Now, let me just make sure you understand, this is actually 2 books in one. This side, the white side, is for the left brain learner. This is about 200 pages. 14 chapters with all the charts and graphs and explanations. If you are a right brain learner, you learn more by stories and examples. You flip it over to this book. This is about 100 pages, 12 chapters with 62 actual client stories. If you want to learn with your right brain and your left brain, in other words, your whole brain, I'd recommend you read both of these books. But when you do, you're going to gain insights into opportunities you never knew existed before. And you'll begin to realize, under a Trump administration, it doesn't matter whether I'm Republican or Democrat. I've never run into any person that was Republican or Democrat that if I could show them how to save $200,000, $500,000, $1 million of unnecessary tax, that they didn't seize the opportunity. It doesn't matter what their political affiliation is. Most Americans would rather redirect otherwise payable tax to causes they support. They want to take ownership of their future. That's pretty typical with most Americans. If that's you, I implore you to claim your free copy and get ready to take advantage of the opportunities that are before us during a Trump administration. Whether you agree with that philosophy or not, look at what it does, not what it is. And you'll seize a tremendous amount of wealth by doing so.